So if you're new or you're on a monthly, you can change to that. If you're on an annual already, if you've already gotten a promotion for us, then we can't change the 15 what you have to a 15-month. If you have an annual with us and you didn't get a promotion, it was a 12-month. I put the email in the chat just now, marketsmith@investors.com. Email us, and I'll be glad to add a bonus month to your subscription. So it's $14.99 for 15 months is the promotion that we have for Mark's attendees.
And I'll be sending out a flyer to everybody along with, I think we mentioned the certificate. We need to send out the properly updated certificate of completion as well. So you'll get an email, everybody, with these two updated flyers.
And an important part, although we hope that you stay the 15 months, if you use MarketSmith for 92 days and decide, it's not for me, then you're always subject to the prorated refund, whether it's 92 days or 9 days or 100 days, it doesn't matter. You always have that option. So you don't feel like, when you make a commitment for 15 months, like, oh boy, I'm stuck. You always have the option of a prorated refund with the annual subscription. Lisa, I'm sorry, don't see the email that he put in. It's the email is MarketSmith, so the name MarketSmith @investors.com, investors.com.
You only send it to the host and panelists, not to everyone.
Oh,
Scott,
did I? I'm sorry. Thank you.
If you
Have I been replying in the chat to nobody? Just to you guys?
If you hit the person's name individually.
Everyone. I needed everyone.
Yeah, everyone.
Yeah, that'll go out to everyone.
Okay. Yeah, I've been replying to some people's questions and no one saw that. I apologize. I messed that up. But yeah, if you have a question, send us an email, even if it's not subscription related. You won't need a promo code. I think, Bob, you will send them an email with the details.
Yeah, I think I can also even drop, I think, the link we have here. I'll send this to everybody here as well, but we'll send out the email in an email. But this is the link, guys, that takes you right to the special promotion for the Minervini Master Trader Program attendees.
And I don't get a kickback on this, so just so you know.
That is true. But MarketSmith @investors.com, guys, as you can see now from Scott, that's how, for those who may already have, as mentioned, the promotion or a membership, you do have the ability to get what would be the one extra month taken care of. Or
just in general question. Okay. Like if we didn't address your question, you're welcome to email us there as well.
There's a question that I know somebody asked if there's the ability to change the bar to candlesticks, or is that coming?
No, yeah. I hesitate to say that it's coming because I don't have any kind of ETA on when, but fast forward long enough, we will have candlesticks.
I've heard that question many times.
A lot of people like candlesticks.
I know.
It's one of the things we get probably the most requested item. So, and again, I don't think I would use it, but it's like the stochastics. Give them a chance to turn it on or off if they want it and go from there. So, but the reason we've stayed kind of in our lane for so long and kind of fought these changes is that kind of legacy, that homage to Bill O'Neill is, this is the way he liked it, and it works so well for him. Why change that? So
yeah. Anything else that you want to show on any features? Or, I mean, we've covered some of the real meat of it. It's very powerful. There's lots of things you can do. But as I said before, approaching it from a more simplistic way where you don't get too complicated in the screens and use the sorting functions, and you sort of layer your screening by having wider nets. You get to see all the names. And, bottom line, Scott, as good as we've all been at, Bill O'Neill wrote books, I wrote books, you guys have charting products and we have rankings and all these things. We still can't quantify this to the point where it does the work for you. We still got to roll up our sleeves and do some good old fashioned analysis and legwork here. So I think it's important, and I often say that, again, if we could quantify it, if we could put everything into a spreadsheet and quantify everything, then there would be no opportunity because the market would be efficient. And so thank God that we can't, and that it is an art form, and it does require skill. Just like poker, you can know about laying pot odds, and you can know the probability of every hand, but there's still a skill element of it. It's not going to be completely quantifiable because you're in a game against other opponents where the skill of operating is you're going against. And the same thing with the market. Varying levels of skill and information is going to create inefficiencies, and that's the whole key. But everything that I was talking, Scott, over the fundamental section of the workshop, and I get these questions. I'll show, I use margin, sales, earnings, and I start getting questions on price to sales, price to book, and all these other metrics. And two things. One, I always say, if analyzing balance sheets was the key to being a great stock trader, accountants would be the richest people in the world. So but what I try to point back is to say, look, my success has been by looking at sales, earnings, and margins. And that's sort of the net. I mean, if a company's making money and they're delivering the earnings and their margins, you don't really have to look much further. And O'Neill, Bill also kept it pretty simple with maybe return on equity and a few things, but it's all right here. It's all right here. And I think it's important for everybody to understand that this whole system and what Bill's work and my work is not off the top of our head. It's based on not only 100 years of collective trading experience, but also analyzing the stock market and the biggest winning stocks going all the way back to the 1800s. So there's a very, very strong foundation around the this information, and that's why MarketSmith is so great. It gives you everything you need in this bird's eye view. Very hard to get all this information in such a bird's eye view where it's so quick to be able to access exactly what you need and filter out all the noise.
Yeah, I think one of the advantages to MarketSmith is a time saver. Think about your time. There's in our database there's 9,000 stocks, ETFs, etc. There's probably as 20,000 worldwide, if you at least probably more. And how do you get down to a manageable level? And find those names? I don't know. I've been a subscriber for years before I came on board. I don't know how I would find it without something like this. Yeah.
Okay. Let's see. Anything else you want to cover, Scott?
There's a couple of questions. If there's nothing going on in the market that you guys want to show, somebody asked about the pattern recognition.
Sure.
So you see the stock. It's got this cup with handle. It's got this large consolidation. It's got this double bottom. So Mike Webster, some of you might be familiar with him. He is a former portfolio manager at William O'Neill forever, and he worked on
a great guy
building this. Yeah, Mike is a solid guy, and he's gone out on his own and hung his own shingle, so to speak. So he's still involved in the markets, but he was instrumental in kind of programming and helping the programmers to try to understand what a pattern is, what's the math behind it. And it's not perfect. It's, because it is math based. So, a lot of people might say, well, I see a cup with handle right here. How come MarketSmith doesn't? And I would just say, okay, no problem. Buy it right there if you want. That's fine. It's more of a guide. But if you hover your mouse inside the base, it'll tell you what the pattern is, what the pivot point, the action price, the buy point, whatever you want to call it, how deep the base is. That's actually probably my favorite feature, is how quickly I can kind of analyze the base. How deep did it correct? How deep did the handle correct? Things like that. And then these shaded areas are the money management principles that we use. And it's a guide. It's, here's the 0 to 5% range where you would build your position. So ideally you'd buy half here. If you wanted 1,000 shares, you'd buy 500. You'd wait. It gets halfway through the pivot. You'd buy 300. You'd wait. It pulls back, but it never hit your stop. This is down 5 to 8% from the pivot, that pink range. And then at the top of that box would be 5%. That's where you would add like your last 200 shares. That's kind of the standard O'Neill system for building a position. And then this green area is 20 to 25% from the pivot. So that's the kind of the standard profit taking area where you'd want to consider, selling or all or maybe a portion of it. And that's how these shaded areas are programmed in.
So a few things, a few points here that are good to talk about. First of all, these are guides, all right? These definitely guidelines, but they go together with the pattern recognition. That's something that if you're a beginner, you probably want to use, and it'll give you a good idea of when you're in a base. If you put this in connection with the my trend template, now you've got stocks that are in uptrends and are in bases. Now, I know there's a question about the measuring tool. There's the measuring tool that I use in the eSignal program. That they don't have the measuring tool here, but as Scott shown, you could hover over and it'll show you the depth of the base and the handle. So that will give you that some of that measurement that you can decipher in the volatility contraction, those iterations. So with that, and the fact that you're seeing where the bases are and they're in uptrends, and then you've got overlaid where you pyramid your position and where you would have your stop loss based on a maximum of 8%. You've got some real good guideposts here to at least get you in the ballpark and really not get you too far off track, because that's in the beginning. There's going to be a lot of variance in how well you do this, because you haven't done it very long and you're not very good at it yet. So you need to have these reference points, and they're very important.
Somebody asked about exporting. So if I run the screen that we built, the results are going to show up down below here in that list panel. And if you want to export those results to Excel, you just click on this wrench this time in the bottom right corner, and you'll see export in. Excel 9703 Excel. I find either one of them works. You just click on one of those. And
a quick hack also is if you just make a new screen and then the screen comes up and it'll be blank, you can cut and paste. If you're in Excel spreadsheet, you can grab a whole bunch of names if you want, and then just hit Control V, and it'll populate this. So instead of importing them in, you could actually import them that way too if you want to cut and paste them in. That's sort of a little quick way to do it that I use.
Correct. Yep, it works both ways if you had them already. So depending on your browser, most browsers dump into the bottom left corner. You'll see I'm using Edge. Edge creates this little download folder up there. And so that's where you'd find the results.
Yeah.
Last but not least, I think as somebody asked about the trend line alerts. So you can draw, I don't know, let's just say for whatever reason you wanted to know if Amazon broke this little downtrend right here. So step one is, and I'm using a PC, so it'll be a little different for a Mac. I think it's Command is the key, but in the bottom left corner of your keyboard is the Control key. Hold that Control key down and just drag your mouse where you want the line to be. And these are all temporary lines. So if you don't like it, you just do it again, or just refresh the chart by hitting the daily button so that it goes away. But once you have the line how you like it, if you hover your mouse over it, you'll see it creates this little dull yellow background. And now right click. Don't fail me now. Thank you. Okay. And here, let me turn off the pattern rec. Sometimes with the pattern rec on, it loses its mind. Oh, I just got too impatient, too much clicking. But if you, okay, so we draw the line, hover our mouse over it. Eventually we're going to get this. I promise.
Okay.
Right click, set alert becomes an option. You'll get the little pop-up box. It says symbol Amazon win line. D stands for dailies because I'm on the daily chart. It's going to create a daily trend line alert. You can do it on a weekly or even a monthly. Do you want an email notification? Yes, I prefer to get it. You can turn that on or off. Hit done. And then the line will change to a dotted black line, and that's a live alert. And it will follow the stock down. So eventually, pretty much, especially for a stock like Amazon, as this trends down, eventually it's going to cross above it and the alert will go off. You'll get the little pop-up bell here and it will say Amazon crossed above your trend line, or you could do it below if you wanted to do it that way as well. So yes, it will follow the stock along the whole way. If you have Market Smith, it gets a little buggy if you try to set the screen. I'm sorry, if you try to set the line alert too far to the right, just an FYI. So just draw the line however you want. It will extend it all the way out. It'll follow that stock the whole way. So you don't have to worry about getting that line so perfect. Yeah, Rick mentioned in if you're having issues with this, it is a little buggy. We are troubleshooting it. So I hope to have this resolved because this is a big deal. My favorite way to send an alert is with a trend line alert because everybody has a price alert. I can do 1 million price alerts with my broker. So I like trend line alerts. Try clearing your browsing history and cache on your browser and then reopen the charts. That could help if you're finding this to be a little buggy. And then the other thing is turn off the pattern recognition. If you try to draw a trend line within the pattern recognition, it kind of loses its mind. It's not sure if you want a trend line or if you want an alert based on the pattern, because you can set an alert based on the pattern. So those are a couple of tricks anyways, until we fix it. And hopefully we'll get that fixed. It's not so unuser friendly.
Okay, Scott, great. Thank you, man. Appreciate it. We covered quite
Thank
a
you.
bit. Yeah, we covered
All
quite a
right.
bit on Market Smith. Any closing comments or anything?
I don't. I really appreciate it. Thank you for allowing us to be a part of your events. And again, if you have questions or want to take advantage of that offer, the Market Smith email, and or I think Bob will send you an email with a link on how to process that.
Okay, great. Awesome.
Okay.
Yeah,
Thank
man.
you, guys. Have a great week.
Thanks, Scott. Talk to you.
Bye.
Okay, great. So now let's see here. Let me go back to sharing my screen.
And real quick, Scott, before you left, I was going to say, okay. I didn't know if he was going to hang out or wanted to hang out, but he's more than happy to.
Oh yeah, certainly welcome to. So we got ADM is moving up a little bit more here, so that's good because it's offsetting my my loss on the as Gordon Gekko would say, the bow wow trade.
Dog with fleas.
Dog with fleas. If we take a look at ALNY, so now ALNY is moving lower here. So again, on the intraday, like I said, looking at this as this was a daily, you see the violations. Once the violations started piling up and you got all those lower lows, it wasn't acting natural now. And now it's corrected even more here. Now, of course, on the daily, this isn't really a big deal. We're magnifying it on the intraday. This is exactly what we've seen over and over. It's stalling out exactly where it should. If it's going to stall, this is where it should. But still, it's fine. I mean, if you're swing trading, you should not be selling this. And let me just point this out here. If this could hold up here, even if maybe it has a bad close around here today, comes off another day. Well, as long as it holds up, it tightens up a bit here. You could be looking at a better setup in a couple of days from now. All right, let me show you. Oops, sorry. This here. And this tightens up a bit. Now you get a reversal recovery, take out that reversal, and you come from an even tighter pivot. And now that's just, once again, just another iteration. You got the first here, right? From here to here. Oops, sorry about that. From here to here. from here to here, and now you have just two more. Now you're getting real tight there, right? That would be perfect. That's exactly what we want to see. And preferably we want to see that during a weak market. Like if the market came off here, let's say over the next few days, the market corrects. And when I say the market, I mean the indexes, and the Dow comes in, but during that time, this stock goes real tight and the volume stays real low. Well, that would be something I'd be even more interested in. Even though I just got stopped out of it, I'll go right back into it. I'll re-enter it if it can break out. So this may improve. And we just may be a little bit early here, but we don't know until in hindsight, we don't know, because this still met the criteria here. So once it starts tightening up and gets that single digit, we could start taking a position. But again, until we see some traction, until we start getting some traction and seeing stocks work and seeing a proliferation of these type of setups working, we want to be careful and just go in light. So yeah, we're moving up here. Also, ADM's moving up a little bit more here, only up a couple percent. But like I said, this is moving in the right direction now. The intraday is acting very good. You can see little natural reaction, formed a little mini VCP, little natural reaction, boom, right into new high ground, and now we're accelerating here. So far so good. Volume, if you take a look at the volume, we're at 12 o'clock. That's actually pretty good volume. You can see we're about 2/3 of the way to average volume. This could easily be above average volume here. So I like what I'm seeing in ADM, ALNY. Unfortunately, ALNY was the one that I bought a bigger position in. So, but it would be nice if I had the 5,000, or I guess equivalent, the 5,000 shares in this one than in the ALNY. But again, offsetting, I took some off into the rally that banked a little bit of profit, cushioned me a little bit, and now I'm up on this one. I'm up about $1,300 on this one. So this is cushioning the hit on the ALNY a little bit. So again, if it just trying to finance that risk here. What else? Let's go. What we can do now is why don't we go? It's 12 o'clock, 12:15. This is where we get into usually a more quieter period around lunchtime in the market. Maybe we can switch over to the workbook now and start going back to some questions that you have about, because we had some curriculum on day 4, of course, that we didn't have a Q&A. If you have questions on that. So let me just, I'm going to change I'm going to stop sharing. Or actually, you know what? No, I'm going to share. Hold on. Sorry about that. I'm going to share.
Workbook.
Yeah, I'm going to go to the workbook. Yeah, I'm going to share. Then I'm going to open the workbook here. Let me just set this
Mark,
up.
I also don't know.
I'm just going to show you the PowerPoint so you can see the PowerPoint, and I'll work from the PowerPoint. That'll be an easy way. And I'm just going to move this over to fill your screen.
Yeah. Did you, I don't know if you
actually do this. Hold on. I can actually just, let me fill the screen so you guys can see it. It'll be a little better here. Okay, there you go. That should be
yeah, it's pretty solid there.
Hold on, I'm going to get it where it fills the whole screen. So there you go. Okay, so now we're in the workbook. Okay, go ahead. I'm sorry, Bob. What were you saying?
I was going to ask if you wanted to have, I don't think we technically set a lunch time of any kind. It's kind of, guys, we're going to do what we do, but
yeah, well, we're not taking lunch. So
right. So just to let everybody know, we don't have a set time for a lunch break that we're not going to be projecting.
Didn't Gordon Gekko say lunch is for wimps? No, we're not taking lunch, but I haven't even had breakfast yet, so I'm gonna try to get my wife to bring me something over here and bring me some food here.
I had a lot of questions, really, as you might imagine, with regards to progressive exposure. People essentially asking, when do you start pressing it? What if you have paper profits but not realized profits? Do you still increase your exposure there? At what point do you start? Would you bring it back down if you take one loss or 2 or 3? So yeah, a lot of questions about progressive exposure, as you might imagine.
Okay, so first of all, let me just say this, that, and Mark, I'm going to bring you in on this too, because we haven't heard much from you. And progressive exposure is something I definitely would like you to talk about. Progressive exposure is a few things about progressive exposure. First of all, it is one of the absolute most important techniques or tactics that you need to understand, and that will make the biggest difference in your outcome, in your success or failure. It is without a doubt, for all the successful traders that I've worked with, that I've trained, they always come back to saying that was one of the absolute key things that made the biggest difference. Now, with that said, it also has the most subjectivity, I think, or it is the least of exact sciences. And we're going to go back here. The bottom line is that it has to be relative to your own size. You kind of start with what your maximum size would be. So just say if your maximum full position is 25%, that's sort of the starting point. Everything's based on that. So that's your starting point. Generally speaking, I'm going to trade at a quarter to a half of that full size and expose from there. So if I'm just starting to get into the market, I might take a quarter. I mean, and then it might even be just like today, just randomly, I just decided, X amount of dollar risk. I'm going to go in 1,000 shares. Let's just say, it's $2 to the low. It's $2,000 risk. I sometimes just make decisions like that, and that's fine, especially when you're trading sort of to keep your finger on the pulse. It doesn't really matter as much because you're just trying to put some money on the line and trade in under real conditions, but you're just getting feedback. So, Mark, why don't you? Is he here too? Because I got him off the screen.
Yes.
There you are. There you are. Okay.
Watching and waiting.
Yeah. So, this is the same question we get over and over and over and over. When do you press it? When do you pull back? How many trades have to be profitable before you bump up? How many trades, what percentage do you bump up? And again, maybe someday I'll do a better job at, quantifying this a bit more and having more of a strategic, black and white answer to that. I don't think so, though. I think it's because it's so built in, it's so based on the individual that, and this is really, part of the art form. But the key is to get yourself to trade the largest when you're trading the best and the smallest when you're trading your worst. That's what you want it to guarantee you, that as the trades are working, you're moving your exposure up, financing the risk. And as they're not, you're getting smaller. So you're not losing the same size or bigger size. When you're losing smaller and smaller and smaller. So if you get into a trending period, you're trading your absolute smallest, so you're in cash. That is the real key that you have to understand. But with that, Mark, as far as any kind of guidelines or rules, where are you at with that, and what would you recommend?
Yeah, I mean, look, this is really the part of this strategy that is the art, in terms of, but it doesn't, it's not that it doesn't have a very firm, science, mechanical, if you will, scientific underpinning. The idea.
I'll be right back. Continue.
Sure. Yeah. Go grab some food or whatever. So a couple of things. The one I would say is I always want to know what is actually going on in my trading, meaning, so let's just say, hypothetically speaking, I've got a list of 5 names. I buy one, it doesn't go anywhere, and 3 others blast off and I didn't buy them. Maybe I bought the first one, broke out, and it squatted. And so I didn't buy another one. Well, I'm going to take the fact that the names I own, I don't have anything to lean on. I'm always looking to build up a cushion to lean on. I know we had a question, Bob, you said about, do you wait for booked profits versus open? Generally speaking, for me, I'm always leaning on open profits first. So I want to use that first bit of traction as something to, as building in some padding for me to buy a little more. But that doesn't mean that I'm necessarily going to let everything just stop me out and clobber me right away. I might move some things up or make some overall portfolio decisions right then. But so the 2 big things is, what is happening in terms of my actual trading, and then where are things on balance? So the more you do this, you're going to have a list where you never buy the whole list, just by the way things work out. So you might have a list of 10 names, 20 names. Today's a good example. If you'd bought everything that poked its head out, ask yourself that, where would you be? You'd be underwater today. So I'm using that also as to say, at some point, we're going to be in a period where, and for those of you guys who've been doing this for a while, know exactly what I'm talking about, where a majority of the names that we're watching are acting well, or they're breaking out and holding and moving higher. So even if I'm only in 2 of them, but things on average across the universe are really acting well, that gives me, again, additional confidence to bump up size. But I am not, if I haven't earned the right in terms of my own trading, it doesn't matter how good everything else in the universe is trading. And there have been times where I buy 1 or 2, I buy a couple of the names that don't move, and a lot of other things blast off because I buy in the order of breakout, and maybe the first couple of names that pop their head out don't really get going, where you kind of have to continue to jockey for position. That is the best analogy, though. The idea of jockeying for position is you're sort of in the pack trying to figure out, how to maneuver. You don't necessarily know exactly, how to, position yourself right away. So that's how I think about it. But I'm never, ever, ever increasing without some form of a cushion. And for me, though, that is almost always open profits first. I don't wait to book them to at least get more aggressive initially.
One thing I was going to add to
Sorry,
that.
I'm muted. I'm sorry. Let me just say something real quick. I like that, earn the right. I'm going to use that and put that in the in the PowerPoint here. Earning the right to trade larger. That is great. Yes. Have you earned the right? It doesn't matter what's happening in the world around you and the stocks that you're not in. It matters what you're in, because if stocks are blasting off, but your trading is not producing the results, you've got to manage that risk, because you are now in the hole. And so that you can't trade larger just because the market looks good or whatever. You've got to earn the right. I love that. Go ahead, Bob. I'm sorry.
I was just going to say, I think I get this question asked, over all the years, probably more than almost any other question, but it really comes down to, as a lot of times, is your individual risk tolerance. Mark are very happy or comfortable perhaps risking what would be profits, even paper profits before. I know some people are more conservative, would rather have locked in profits before they escalate. So that's why we always talk about the pillow factor. We have to do what you're comfortable with so you can sleep comfortably at night. And it can be frustrating if you use previous profits to then increase your exposure, only to have it get lose that back on the next trade, because in the example there, you're losing back the $1,000 that you made on the first trade. Mark's okay with that, because if he catches the market just right, it's going to lead to that second win, that's the third win, and accelerate it. And if he gives it back, it's nothing lost, nothing what's the expression you use, Mark? Nothing gained, nothing lost, kind of just a push. And that's something he's comfortable with, but some people are not, and complain and get all worked up when they just lost everything they just won or made in the first wave of trades. So that's the thing where it is an individual decision to really understand what you're comfortable with.
On another point too, just on position sizing and so forth, you see today, I went and I bought 1,000 shares of ADM. I bought 5,000 shares. So I bought a much larger position size. And now the one that I had the large position size, was the one that stopped me out, and the smaller position size is the one working. So, and this is another question we get all the time, as far as should you take equal position sizes or have favorites and so forth. It generally comes out with me. I'm a professional at this, and I'm going to I have such a consistent application of discipline that it comes out in the wash. I may have done that today, and tomorrow it'll be just the opposite. I'll position size big on the one that'll work, and the one that I position size small won't work. So my intuitive gut is pretty good at this. And even though I may not get it on any one day right, over time, they sort of just all come out in the wash. But you should probably try to be more mechanical with this and develop some type of formula based on your largest position size, and maybe cut it in half, quarters, and then just negligible, sort of just keep your finger on the pulse, what David Ryan calls mental health buys, just buying a little bit in case the stock takes off, and being involved. I would try to break it down into those tranches and sort of have a formula that you, some formula, some plan that you stick with, instead of shooting strictly off of your own emotions or having favorites and things like that. It's going to take a long time before you get to that. And even with myself, I try to keep my position sizing as standard as possible. When I start trading, and the way I do it, to be honest with you, the way I do it is I just try to work up to the biggest positions I can possibly get on. That's sort of how and that is really when I'm making money, big money. It's when I've got the big positions on and I got the big exposure. So that's what really matters. Everything else is sort of jockeying for position and treading water and making a little bit, chipping up a bit to have those profits, to be able to get aggressive and keeping the downside in check. So again, what's really important, and then once I do trade big, all the positions are pretty much the same because I'm just putting on the max that I can. That's what Mark and I are trying to get to. We're trying to get to that point where we've earned the right to be as George Soros and Stanley Druckenmiller said, be a pig in the market. I'm a chicken most of the time, but every now you got to get piggish every now and then and get in there and be greedy, and you put the big positions on and make hay when you may. So, but that's a very small portion of the time that you're in the market. If we're averaging 50% out of the market, and it might be 10 or 20% of the time where you're really super aggressive. But that's the upside. Like, that's the benefit of being exposed only minimally and making a lot of money with not having exposure all the time. You don't want to be exposed all the time. I just had a nice big plate of eggs delivered to me here, so excuse me if I eat in front of you.
Question being asked if you ever use a time stop versus just purely a price stop, because he finds he might be in a trade, other trades are setting up and breaking out. He doesn't know if he should close the trade that's not working to put the money into a new breakout.
Well, you got to be real careful with time stops, because just because a stock hasn't gone in X amount of minutes or days doesn't necessarily mean that it technically has soured. As a matter of fact, like I just showed you in a few of these examples, it could improve, and time is your friend. So I know some traders, actually a couple come to mind that came to Master Trader Program that are massively, massively successful. And both of them, there's two in particular that do use time stops. They use it when they put on the trade. So like, for instance, the ADM trade, they go into this trade today. If it doesn't go right away and it stalls, they give it X amount of time, call it 2 hours, 2 minutes, whatever you want to call it. Then they say, okay, I didn't time it right. And they get out, and then they look to re-enter. That's, a very expert approach that you have to, again, if you have re-entry mechanisms and you're nimble enough and you're in there watching this all day long and you're trading more professionally, as opposed to, you're part-time and you have a job, it'd be a lot harder to do that. So I'd be careful with that, but it certainly has its place. I look at the time factor on the chart. Is this time too long on the chart? Is it abnormal? So I relate everything back to the chart. The chart tells me everything. Now, as my good friend Stan Weinstein says, the tape tells all. And I agree with that. Pretty much everything.
Somewhat of what you just talked about a moment ago, Mark. The question was related to that, so I want to ask it. In what this individual is experiencing, he'll have a couple of successes with the smaller size trades, then he steps it up and has the one loser wipe out what was previous gains, because he wasn't doubling, he's just incrementally increasing. So his question is, his stats look good because having a couple winners, but on a dollar basis, he's still at break even, showing no progress. How do you handle that, or how do you deal with where your stats may look good on a percent, statistically, but the dollars are not reflecting that?
So that's only because you haven't been in a really strong trending environment. I know just by what you're saying that you haven't been trading in a strong trending environment yet. And so you're in a sideways action market where the aggressive exposure is doing its job. That's precisely what's supposed to happen. And it's frustrating because you're not making any progress, and then you very quickly give it up, and you're zagging when you should zig and zigging when you should zag. But that zag zig is actually the proper zigzag. It actually is that is the right way. That's the cost. See, there's a cost. Everything has a cost. There is no free lunch here. All right. If you sell the stock soon, you risk a bigger move, right? If you take the small profit, then if it goes higher, you miss that bigger move. You sell the stock at a loss, it could turn around and go back up. There's always a cost associated. So, but that's the cost for making sure that you are trading small when you're trading the worst and trading large when you're trading your best. So now, okay, let's say the market gets into a real strong